We definitely think Toronto stands out in Canada, but we usually stay more quiet when it comes to where to invest in Toronto because there are a lot of uncontrollable factors involved and it gets a little bit more speculative. But now that more deals are popping up and cash flows are starting to look more similar across Toronto, more and more clients are now asking us what areas might outshine the rest post-recession. Now, in another video, we did talk about why Toronto semis might be the winner when it comes to home types. But then here comes the next question. Which areas might come out on top once things recover? Now, let's take a trip down memory lane and check out which neighborhoods were the winners in the last recession. If you're new here, I'm Samantha Chan from Elevate Realty, and our brokerage wants to help you make smarter real estate choices in Toronto. Don't forget to like and subscribe if you enjoy our content. Let's begin. All right, we're going to zero in on semis in Toronto because they're probably the smartest pick for investment if you want the most stable growth coming out of recession. Now, we are going to look at 3 pockets in Toronto from the last recession in 2007 and 2008 for this analysis. Downtown Toronto will be our first area of focus, and this is the most mature rental area. Next, we're going to look at areas like the Junction, which was gentrifying 15 years ago during the last recession. Just note that the Junction won't be the same this time around since it is a lot more mature today, but we're just using it as a gauge for gentrifying areas in general. And third, we're going to look at the budget-friendly areas, and for this, we're going to be looking at Scarborough. Now, first stop, downtown Toronto. Downtown is a smart pick for real estate investing because property values do have a track record of staying robust and stable. Now, if you look back, we do notice that prices went up more than average before the last recession hit, and then they also took a bigger dive. So this ends up creating a bigger gap between high and low prices. What this means is that if you manage to buy at the exact lows and sell at the exact highs, you could potentially see better growth than normal. Now, this does sound great, but it's actually very tough to hit. But even if you don't hit it perfectly, investing downtown in mature areas is still a very safe bet for solid growth over time, as long as you can afford the higher purchase prices that these areas do have, and you are able to ride out the shorter term price swings. Moving on, in the last recession, the Junction was in the process of becoming more and more trendy. And so the end result was that it experienced a lower volatility compared to downtown during the last recession. Let's take a closer look at the gentrification process. Before gentrification happens, if you look at the Junction, it saw slower growth compared to downtown Toronto. And then as gentrification kicked in, growth spurt happened as it tries to catch up to more mature markets before eventually stabilizing to more similar rates of growth compared to downtown. So applying this to today, this type of growth probably won't happen to the Junction again. But if you invest in areas that are in the early stages of gentrification today in 2023, then you will probably see faster growth for around 5 to 10 years, although it does eventually end up evening out after that. Now, moving on to Scarborough, this is probably the most budget-friendly area in Toronto, but perhaps because of that as well, it does carry some stigma with it. So even though it is the most affordable area, it has seen the slowest overall price growth because it was a lot less desirable. And during the last recession, it did take a much longer time to bounce back compared to other neighborhoods. Taking a step back, I would say that you shouldn't directly apply the trends from the last recession to predict what might exactly happen this time around for 3 reasons. The first reason is that in the last downturn, prices fell across the board at the start of the recession. Now, this time, real estate prices have already taken the hit before this possible future downturn, thanks to our steep interest rate hikes, which has shocked our market much earlier. 2, coming out of the recession, we also don't expect prices to bounce back as quickly as last time because interest rates aren't expected to drop as quickly. And then 3, you have to keep in mind once again that areas going through gentrification are always evolving. So to get this right, you need to understand what's happening with the local market and local growth right now to get it right. Now let's crunch some numbers too to see where prices might be headed this time around. These days, variable rates are around 6.8%. And based on where the banks predict interest rates will be by the end of 2024, interest rates might come down around 1% on average. So what this means is that even if prices go up around 10% by next year end, mortgage payments will stay the same. So the upside potential for real estate price growth is definitely there if interest rate predictions do come true. Of course, where property prices go might also be influenced by where rents are headed and other unpredictable things that might happen that could throw us a curveball as well. But in general, we do believe that Toronto will be the most resilient city in Canada, since it is our country's hub for finance, culture, entertainment, and all of these things will give us strong housing demand. And when you factor in our limited housing supply too, this should give us more robust support for both prices and rents too. So all of this neighborhood research that we just did really points us to 2 good options that might outperform if we hit a potential downturn. Number 1, mature areas are always safe options with stable appreciation. And if you buy right now specifically, what you would notice is that prices have actually dropped by more than average Toronto prices in these areas because of the high interest rates. So you end up getting the potential for higher price gains if the market bounces back. And number 2, areas that are in the early stages of gentrification are always top picks for us too. So feel free to leave a comment below and let us know where you think these areas are in Toronto. And if you want to learn about our top picks, just book a private call with us to find out. And we can also help you find that best Toronto opportunity to invest in too. We're not your typical real estate sales brokerage. Instead, we focus on using numbers to make better real estate decisions in Toronto. That can mean looking for stronger investments with great cash flows, thinking about risk management, looking for ways to boost returns like value-add renovations, or even focusing on gentrifying areas. If you want to discuss your private real estate investing situation with us, just head over to this link here to set up a time to chat. You can also check out more content on our website or find us on social media. And if you haven't done so already, please like, subscribe, and share this video if you think someone else might like it too. Thanks so much for watching, and I'll see you in the next video. Bye.